WP Carey stock, ticker symbol WPC. This stock is down almost 16% year to date, underperforming the SP500 big time due to different reasons. But as of lately, the stock is getting some momentum. On the 3rd of November, WPC reported mixed Q3 earnings and narrows the full year of 2023. On the 7th of December, WPC reduced the quarterly dividend by almost 20%. And people love WPC stock because of multiple reasons, but one of them being the dividend. And I understand why, with dividend yield at 5.3%. So could this be the perfect time to buy WPC stock? I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does WPC do? WP Carey is a real estate investment trust principally involved in the ownership of properties located in the US, Western Europe and Northern Europe. If we dive in the most recent earnings results, we see that net income was reported at $125 million and EPS was reported at $0.58. AFFO, one of the most important numbers with REITs, was reported at $284 million or $1.32 per share. The thing I don't like here is the fact that this number is down year over year. WPC also lowered the full year AFFO guidance to a range of $5.17 to $5.23 per share. For the full year of 2024, they expect a range of $4.6 to $4.8 per share. WPC is executing the strategic plan to exit office buildings in the portfolio, which investors have mixed feelings about. The office sale program is expected to be complete by early 2024, and from now on, WPC focus primarily on industrial, warehouse and self-storage assets, which to me feels like the right move. From here, they also focus on a AFFO payout ratio of 70 to 75%. In total, WPC Carey has 1,472 properties in their portfolio and 395 tenants, so to me this looks really good. North America represents 66% of the revenue and Europe is sitting at 33%. The WALT is sitting at 11 years, which I think is good. Occupancy rate is at 98.9%, looking really good to me. Another important number is the net debt to EBITDA. I prefer a range of 5.5 to 6.5. WPC is sitting at 5.7, again looking really good. In here we see that the industrial segment represents 29% of the revenue and warehouse 23%. Retail is the third largest with 17%. And if we look at the tenant diversification, we see that retail stores is a big one with 20%. From there it rapidly decreases to 9% for consumer services. Overall, these breakdowns look really good to me in terms of diversification. Another interesting number is the same store ABR growth. It is sitting at 4.2%, which is a great number. Keep your eye on the current numbers since it is decreasing a bit. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. WP Carey is a 13.86 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 11.2, indicating they might be undervalued. Later in this video I will show you my 3 price targets for WPC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 1.73 billion and in this graph we see that revenue went up in the long run. However, it is not really steady and consistent, with a lot of years reporting negative numbers. We see that margins are going up and down quite a lot in the long run, but in general it is going up, which is a good thing. Most recently it is coming down again, so keep an eye on this number. EPS is showing similar trends as the margin and revenue. Keep an eye on this number as well. Analysis expect 2024 to be a tough year in terms of EPS. After that, they expect EPS to return to high single-digit growth. For the revenue, it is looking a bit more interesting, with also a tough year in 2024. But in 2025, they expect 15% revenue growth. Return on assets is sitting at 4.8%, which is a decent number for a REIT. Return on equity is looking good, and the most important number, return on invested capital, is sitting at 3%, which is a low number. But it is slightly higher than the 5-year average, so that is something that I like. Current ratio is at 0.85, which is a decent number for a REIT. Nothing special to mention here. Right now, WPC has 8 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. WPC has 139 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. To me, this looks really good. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is still sitting at 5.3%, which is a great number. Annual payout is at $3.44 and payout ratio is at 87%, which is above the 75% average for REITs. The growth numbers aren't that spectacular, with a 5-year growth rate of only 1%, but 12 years of consecutive dividend increases looks good to me. WPC did a dividend cut of roughly 20% announced earlier this month. This has to do with the sale of office buildings. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to stay at dividend cut levels. Overall these dividends look pretty interesting to me in terms of current yield, but how about the historical returns? I decided to compare WPC stock with the overall market, in this case the S&P 500. On the 5-year chart we see that WPC returned almost 25%. This is including dividends. The S&P 500 returned almost 102%, also including dividends. So you are better off with owning the S&P 500 in the past 5 years. On the 1-year chart it looks pretty similar, with WPC having a lower return versus the S&P 500. In fact, WPC had a negative 14.5% return. On the 6-month chart it is again WPC with a negative return, but keep in mind this is including dividends. On the 1-month chart it is finally a win for WPC with a total return of 14%, beating the S&P 500. So bottom line, WPC underperformed the S&P 500 massively on the 5-year chart, but most recently it is getting some momentum. So could this be the perfect moment to buy WPC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm filling in 42, 44 and 48%. And for the free cash flow margin, I'm putting in 62, 64 and 66%. For the PE ratio, I'm putting in 20, and for the price to free cash flow, I'm putting in 13, 14 and 15. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now, WPC stock is at $64. I hit analyze, and we see a lot of green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $67, which is around the current stock price. We have a mid price target of $83, and we have a high price target of $103. To me, the low to mid price target is the most justified here, indicating that this stock could be undervalued right now. My final conclusion on this stock is that WPC is changing a lot. And to be honest, to my likings as well. I'm glad they are selling the office buildings and focus on other industries. 2024 is going to be a tough year, and that is also what I'm hoping for in terms of stock price. Most fundamentals look good and the valuation also looks pretty interesting. I believe that when the company is changing and meeting the expectations, this could be a great investment starting in 2024. Dividend also looks really good, and the recent dividend cut made sense to me because of the sales of office buildings. I'm not worried at all, to be honest. For now, I will be waiting and analyze them from time to time in 2024. I will do a little bit more of research, and maybe in 2024 I'm opening a position. I've added them to my watch list, so let's see how they perform in 2024. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor, and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up, and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.